Now we're talking. Weekend's over. Back to work here tonight. Hope you guys got some rest this weekend. Boy, oh boy, do we have a busy week ahead of us. It's Monday evening. Time to get back to making money this week. We're getting ready for Tuesday's trading session. We have a ton to talk about tonight with a very busy week ahead of us. But not to worry. I got some great trades on my radar for tomorrow. I'm going to cover all my favorite trades in tonight's video to make sure to game plan to make some money on Tuesday. Before we jump in and tackle a lot to cover here tonight, make sure you subscribe to our channel, set those notifications so you don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, do me a favor, hit that like button and give me a shout out, give me a heads up, right? Give me a shout out in the comment section below. I always love to hear from you guys in the comment section. So I appreciate you guys tuning in and watching the video here tonight. But enough of the intro. Tuesday is right around the corner, and boy, oh boy, do we have some great trades to talk about tonight. We get a ton of news coming out this week, so let's not waste any more time here. So everything's bearish right now. You can see, right? S&P's bearish, Nasdaq's bearish. Crude oil is very bearish right now. We'll talk about why I say that a little bit later on in the video. Right now, we're very bearish, but you probably notice we have kind of these lazy trends right now, right? We're sitting on major lows, so not a very attractive area right now to be a seller. We're kind of sitting on major support. That tells us short the bounces, right? Short the bounces. We definitely have some great shots. Now, we're looking for a couple of big bounces here right now. Short the bounces for tomorrow. Whenever we expect to have some deep bounces, what do we look for? Bull traps, right? Bull traps. Just like we talked about last Friday, we're using stops as fuel. Lots of great bull traps we're watching on the bounces here. And I'll definitely have some breakouts going lower here as well, because again, kind of that lazy bear bias right now, that lazy bull trends. We got some breakouts going lower, some definite bull traps, and some reversals as we go higher here. So plenty of ways to make money on S&P, Nasdaq, and crude oil. And of course, I'm going to go over all of my favorite trades here in just a moment. Before we do that, let's all get on the same page, because oh boy, we have a record-breaking week. Get a record-breaking week, right? There are four things that you want to keep in mind for tomorrow. First of all, that's the end of the month, right? End of the month. Anytime we have the end of the month, I always tell my students, be aware of increased volatility. And whenever we expect more volatility, it's always helpful to trade with that volatility. So what I always tell my students is, think about using smaller position sizes, widening out your stops and your targets. That way you can trade the volatility and not get run over by the volatility. So the first thing for tomorrow is be aware. End of the month, volatility usually kicks up as we transition into the new month, right? As we go into the month of February. The second thing that you want to be aware of is the big news for tomorrow. We got the ECI number. That's an inflation number at 8:30 Eastern time. And we got the Chicago PMI number at 9:45 Eastern time here. Now, we talk about this a lot on this video newsletter. One of my favorite times of day to trade is between 10 o'clock and 11 o'clock. We oftentimes find some of the biggest moves in our trade room at that time of the morning. And so I definitely have that Chicago PMI number on my radar. I know, right? I know neither one of these are red star news events, right? But these will be the ones that you'll want to pay attention to tomorrow in most cases. The ECI number, the employment cost index, and that Chicago PMI number at 9:45. And again, I would make sure you're paying attention between that 9:45 and 10:45 block tomorrow morning. The second thing, or I guess third thing now, right? Luckily, I'm not teaching math here tonight. The third thing you want to keep in mind for tomorrow is, oh my goodness, earnings. We talked about this last week. We go into peak earnings. By the end of the week, we'll have like 50% of the entire world's market cap. We have literally 15% will report on Thursday. So tomorrow's of course Tuesday. Well, what about Thursday? Later on. There's a couple names here you might recognize, right? There's a lot. Look at those numbers. Look at those numbers coming out before the open. And then obviously not as much after the close, but a lot. I mean, look at those huge companies, right? Most of us have heard from all of these companies before. So we know, and as we talked about the last few weeks, be careful overnight, because when the volume is low overnight, things start to move ahead of earnings. So please be careful in the overnight, the pre-market, the post-market, and once again, trade the chart. Trade the chart. As I always remind you guys, I do not care. If I were you, what my plan is, I will not waste 1 second of my energy tomorrow on what the actual numbers are, because the numbers themselves are completely irrelevant. We'll talk about the game plan for tomorrow, but please don't overthink this. If we've learned anything the last 2 weeks on this video newsletter, the news is noise. The earnings are great. Trust me, I'm very curious. I'm definitely curious what the numbers are, but it's not going to help me make decisions in my trading tomorrow morning in our trade room. So again, be careful overnight in the pre-market. And again, we'll be talking more about these earnings reports coming out later this week, but a lot before the open and a lot of stuff coming in later on this week. The fourth and final kind of aspect, at least for right now, is the FOMC announcement, right, coming at 2 o'clock on Wednesday. Now, you definitely I know you felt it. The markets were a little bit nervous today. We had some kind of unexpectedly high inflation numbers that came out of Spain, places in Europe overnight, last night, and that really kind of spooked the markets. I'm not going to talk about what we're expecting for Wednesday's FOMC. We'll talk about that in tomorrow night's video. But, don't be surprised if things are a bit squirrely, right? As the markets are a bit nervous right now ahead of that FOMC announcement coming late on Wednesday. So end of the month, big news coming tomorrow, earnings tomorrow before the open, and kind of tiptoeing into that FOMC announcement, which really might be one of the biggest news reports of the year here, because we're expected to finally start seeing the Fed slow things down. So catch my breath on that. I know, right? We don't usually have this much talk about. Oh, and by the way, we got non-farm payrolls on Friday. All right, we're going to come back and we'll talk more about this, obviously, as we go deeper into the week here. But that's what's on my radar for tomorrow. Now, can we get to some charts here, please? Because the charts are where the charts are where we make our money, right? The news, of course, is noise. And guys, if you like making money, if you like winning trades, make sure you watch all the way through the end of this video tonight, because I'm going to cover all my favorite trades on each of these three markets. And remember, every setup that I talk about tonight can be applied to your favorite market. So, trades we talk about on the S&P can be applied to the Nasdaq and the oil, right? And vice versa. I'll cover trades on the oil tonight that can directly be applied to the S&P. So don't just click off after your favorite chart is finished, right? If you like making money, make sure you watch all the way through to the end. All right, let's keep going. Let's go S&P, let's go Nasdaq, and let's go wrap it up here tonight on the mighty oil. Now, a couple things you want to be aware of. First of all, these are all tick charts, right? Upper left-hand corner, they're all going to be tick charts. You can always see the time frame, upper left-hand corner. This is the 21 EMA, exponential moving average. And also be aware too, guys, I'm going to put a bunch of slower time frames as always. I got some really interesting 60-minute charts, 4-hour charts. I'll put all the extra links for additional time frames, which will be kind of a complement to this video tonight. I'll put that down the description of the YouTube video, so grab that, and I'll be kind of referencing those as we go throughout the day here, right, throughout the video here. All right, now, what's the most important factor right now on the S&P? The most important factor is we began the day today with a very strong overnight move. Again, markets got a bit spooked by some high inflation data coming out of Europe. And of course, with the FOMC coming on Wednesday, everyone's a little bit nervous now that maybe we might not be out of the woods for inflation. And of course, the Fed might raise rates higher than they're expecting. The bottom line is, anytime we see a strong move down, we expect a retest of that low. And of course, that's exactly where we are right now. As we always say in our trade room, mission accomplished. Now, we are in the process of potentially rolling over on our slower time frames right now. Last week, we're very bullish last week. But I'll tell you, when you see those time frames, those additional charts I put in the description, you will see we are inches away from rolling over on a 60-minute time frame, which is why I call this a mixed bias. Yes, 24 hours now, but from now we could easily be back to being bullish. But right now, though, it's really difficult to call this a bull market. Now, even though we're very bearish right now, strong move down, retest the low, is this a really great place to sell? It's not, right? I don't want to sell low. I want to sell high. I don't want to sell at support. I want to sell at resistance. So if you put yourself in the shoes of, experienced traders, professional traders, this is not a very good place to sell. We need to attract more sellers into the market right now. How do we attract more sellers? We need to either get price at a higher price, right? Because bears, of course, want to sell high, right? That's one way to attract sellers with higher prices. The other way to attract sellers is to increase the momentum of this market, right? If we can get some more lower lows, if we can start breaking this thing down, that's going to give bears a hell of a lot more confidence to get more aggressive. So these are the two situations we've got to be ready for tomorrow. Not a very attractive area to be selling right now. I'm leaning just a little bit more on the bear side, not just because of the chart in front of me, but because of the 60-minute time frame I've got linked up in the description. What would my favorite trade be for tomorrow? My favorite trade for tomorrow would be to get a nice deep bounce, trap in some of these buyers with some bull traps, right? And then whoop, right back down to retest the low. I've got levels, channel levels, pendulum swing levels, big channel level right up overhead. The real tough part right now is if we do get this mark going higher, it's really difficult to find an easy way to be a buyer, because by the time we get enough momentum going for the buyers, the objective is back to the high. It's going to be very tricky to time entries being a buyer up here. So again, possible, we may see a big reversal here, but as of right now, it's not as easy. The easier way to make money right now, for what I know right now, is the short side. So how do we do that? I'm going to talk about some breakouts going lower. I'm going to talk about some reversals going lower as well. So you want to make sure you keep on watching on that. Let's talk about some ways to make money, right, as we go higher. Really, the hardest part right now is we're not really bearish right now, right? I'm kind of just leaning over on the bear side. So we got to be a little more careful. I'll talk more about that on oil later on. The way you want to do this is just like you made money last Friday, right? Except flip it around, right? So let's get this price to pop up, get up into some of these areas of resistance, and then think about now what I'd love to do is get some buyers coming in and get them trying to force this thing going higher, right? Because this pop up could be pretty, it could be pretty sharp, right? Like we saw, earlier here today. And that point, if I can get some buyers to come in and let them try a couple times up here, right, to buy this thing going higher, if I can get those buyers to commit, then think about now where all their stops are. And what I'll do is I'll use a classic bull trap or a buyer failure pattern, right, as we teach in our free trading course, and we'll simply sell right into those stop losses for the retest of the low. Now, my favorite trade for tomorrow, my favorite trade for tomorrow is I'd love to get this thing go a little bit higher, right? Go a little bit higher, right? Really make it seem like, oh my goodness, we're reversing now. And then again, difficult when you buyer up here, right? Because you're up at resistance. There's not much space to be buying back to retest the high. Tough place to be a buyer up there. I'll talk about more about that in a moment. But my favorite one would be get up, again, trap in some of these buyers. Let the buyers try a couple times as they pull back, grab. Now, we talk about this in the free trading course, what I call a failure into a pullback combination, right? The failure pattern is pretty simple. We get above the moving average, we go into resistance, right? We trap in some of these buyers, right? Bull trap or a buyer failure, as I teach it in the free trading course. And then as we roll over, we grab that, right? We grab that first pullback. We see a lot of these in our trade room, the same patterns I teach you guys in that free trading course, which reminds me, I know that most of you guys have taken the free course. I know you guys know this failure into pullback combination because I got 3 emails this weekend about folks using it to make money. But listen, if you're here for the first time tonight, or if you haven't taken that free trading course, I want to make sure you know these entry patterns as well. So what I'll do is I'll put a link up there for you in the upper right hand corner. Grab that link. Take the free trading course, because the strategy that I teach in that free video will show you a really simple trick to know where the winning trades are more likely to be each day. And I'll give you 4 different entry patterns, failures, traps, pullback combos, right, to help kickstart you making money on your own account. If you're tired of missing the best opportunities every day, if you're not getting the results you want, grab that link, take that free trading course, and we'll talk a lot about those deep pullbacks, trapping in those bulls, using their stops as fuel, and then grabbing that first test right off of that move and back down to retest. One more variation I want to talk about here. Probably let's do two more variations, then we'll move forward here. Now, one more variation. We may end up really ripping higher. The buyers may easily come back to the 21 moving average. They pull back. They don't try once, twice, and then fail. No, they pull back and they retest that high. Okay, we call these double top reversal. Remember, anytime we see a strong move in one direction, we expect a retest of that level. So it wouldn't surprise me, a strong move higher, they retest. Remember, once they retest though, now the buyers have to show us they want more, right? The bears, like for example, the bears did not show us they want more. That's why I'm expecting a deeper pullback here. If I can get this into pop-up, get those buyers to retest the high, now let's rope in the rookies, right? One try for the bulls, two try for the bulls. It's the same idea. It's just once they retest, we do it again, right? Sell right into those stops. And then as we make that drop, we're looking for that first pullback, right, as we go here. One thing you want to think about on this, and this will be a little more advanced tactic on this, is as the market begins to roll over off that high, what you can do is you can draw a trend line off that low, find a channel, right, off the high, and oftentimes that channel will be what the actual trigger comes off of, right? So we pop up, strong pop, we pull back, we retest the high, the rookies come in, they're buying too high, right? They're buying right into that retest, right? Not a good place to be a buyer, not high, not at resistance. So we sell into those stops with a failure pattern, like you guys learn in the free trading course. And then again, we draw that new channel off the lows, up around that high. And then again, this could be any of the entry patterns you guys learn in the free trading course. It could be a bull trap. It could be a buyer failure. It could be a pullback combination, a strength move as we collapse back down to those lows, right? All right, so that's a great variation. One last variation as we go higher here. One last variation. What if we punch up and we collapse right back down? I mean, come on, that could easily happen. So what if we punch up here? What if we don't get 1, 2, or we don't get a retest then back down? What if this thing just punches up and immediately just pops and goes lower again? How do we trade that? Great question. These will most often they'll turn into what's called what I call kind of a V-top, and it'll pop and grind. It'll begin to grind down, grind down, grind down. Now, once we see that thing begin to grind, right? Once it grinds down like this, all you got to do is go mark a trend line off that low, bring it up around the high, and then repeat after me. Look left, find those prior swings, and what? Traps, baby. These are really, really easy money trades. But the hard part is you don't want to get suckered into trading it as it goes lower, right? As it goes lower, we don't want to chase it going low. Remember, as a seller, promise me you'll sell high. You'll sell at resistance, right? If what happens a lot of times is the market will begin to grind lower, and you're like, shoot, I don't want to miss out on the move back down. And you know what happens? Once you get in short, right? And I know I'm not the only person that got made foolish of doing this mistake when I was a rookie trader, right? You jump in short. You're like, oh, shoot, I want to miss this thing. You jump in short. And once you literally get in, bingo, that's when it pops up. And of course, your stop is right up here. You get stopped out, and then all the pros come in, and they rip the sucker going lower. So if it ever goes in for like a V-top like this, right? If it V-tops and comes crashing, grinding back down, look for that new channel. Grab that bull trap right off the high as we go here. All right. Now, I want to talk about the move going lower, because it does seem like that might be a very likely scenario here for tomorrow. Before I talk about that going lower, though, how would I trade going long here, right? How would you do it going long here? The hard part we have right now is that even though we still have again, you'll see on those time frames I put in the description, we're still overall pretty bullish, but there's starting to see some cracks in the bull trend here right now. I'm sure a little bit was because of the FOMC. So if we can get this thing to pop up, right? If it can pop up, if the buyers can hold the pullback, right? This is where it's difficult though, right? They got to hold that pullback and they have to really jump, right? Going higher. Now here's the classic problem we have whenever we're very bearish looking for a reversal like this is I can't buy that first pullback. I mean, you're more than welcome to, but that's not a very reliable trade, right? That's probably a 40% trade. Okay. Now under normal conditions, if I mark a channel off the high, channel off the low, find that prior swing. Normally, this is a very good trade right there. Okay, what's the problem though? The problem is we have no space left, right? At that point, there's no meat on the bone anymore, right? Remember, buyers don't want to buy high, they want to buy low. So this is kind of the only way we can really justify being a buyer. And I'll tell you, if you want to be a buyer off that channel low, this jump off the moving average better be really, really strong, right? This thing needs to be like on a string, like whoop, right? And really pop. And then once we get that really, again, if we get a real strong pop going higher, then we can start looking at some reliable entries off that channel, right? But don't be surprised here. Don't be surprised if it tries to pop up and then 1, 2, roll back over, right? Don't be surprised if it's a bull trap. So I'm definitely aware that if I want to be a buyer, that's the best place to do it. But I'll tell you, there's not a lot of incentive up there to be a buyer. And maybe you're wondering, well, why not buy down here? Because look at this chart, right? Does this look it's not, right? And so it's difficult to want to buy here. It's really difficult to want to buy right here. So it's like I said, I'm well aware on a 60-minute, there's a lot of reasons why this could turn around and be bullish tomorrow, but we're sure as heck not seeing it right now, right? And this is one of the hard parts of being a trader. Sometimes we have to look at this and go, you know what? I'm okay with missing a move if it means it's not a reliable trade I can take. All right, that's my game plan as we go higher. Now, let's cover the good stuff. Let's get deeper into this. What if we go lower? Right? What if we go, this is a very, very important question because with these lazy trends, big news, who knows? We might keep on grinding down, right? I want to have a game plan for that. So right now in the NASDAQ, and again, all this stuff can pretty much be interchangeable here right now. If we go lower here, remember the NASDAQ, same basic idea, right? Pop it up, trapping the buyers, back down, right? Pop it up, trapping the buyers, grab that first test, right? And back down. Pop it up, V top, grinds back down. You get the point, right? Same basic idea. Now, I will say the NASDAQ has some more space to go. So if we were to pop up, right, if we were to hold the pullback and really, remember, it has to really rip off that moving average. Okay, now I can start looking at buying that first test off of that channel, right? It's just like I said on the S&P. We have to literally prove to us this is not a bull trap because right now it's not a bull market, right? Again, long term we get some more bullishness, but this is very bearish here right now. So I'm not interested in taking that first pullback. I'll definitely be more interested on the low of that channel. But again, right, this could easily pop up, try to go higher, and collapse right back down, like we mentioned earlier. Anyways, now, as we go lower, if we go lower, you'll notice how lazy this trend is right now, right? Strong move down, retest, not much of a breakout. Strong move down, retest. We're literally sitting right on major support in a kind of a lazy bear trend. What I want to think about now is if we continue this lazy trend going lower, I'm literally going to just simply adjust this channel, bring it on down, and wait for that same game plan again. All right? So one scenario you want to be thinking about here is if we kind of keep on bleeding lower, right? Not racing lower, but bleeding lower. We talked about this last week on Thursday night, and it worked out perfectly on Friday morning. So if all we get here overnight is this lazy thing we go, right? This lazy trend lower, okay, I'm going to keep on adjusting this thing down, right? I'll find that channel. I'll find, you know what I mean? Everything just gets tilted it a little bit steeper. It's the same game plan, right? Pop it up, trapping those buyers back down, right? Same exact thing that's talked about on the S&P. We pop it up, V-top, right? Grind back down. Okay, so same basic idea, right? Same basic strategy if we kind of grind lower. The big question is what if we start to really accelerate going lower? And acceleration, there's really, for the most part, there are there's two basic breakouts going lower that we can use. What seems most likely is to get that breakdown, that pop up, and then that seems most likely right now, right? But hey, we'll see what we get. Now, what if the market opens up, we get more bad news overnight? I don't know, I'm just speculating, right? And the market really shoots going lower and begins to grind down. What do you do in that situation? You draw the trend line off that low. You bring it up around these highs, right? See what I'm doing here? I'm not going for that big, wide channel anymore, right? If it pops down and begins to grind, the grind is the giveaway, okay? It's an easy giveaway. Your job now is to find that channel off the highs, start drilling down, right? Remember, this is a 4,000 tick chart. We'll drill down to a faster time frame. Find those prior swings. Remember, prior swings are where traps live, right? Bull traps. Get above the 21 moving average, get the buyers to come in like up here, get the buyers to come in, try to buy above the 21. All their stops now are a sit and duck, right, off of that low. Stop run, a buyer failure into what we call a pullback combination, okay? Now, remember, when it comes, and again, right, trap, failure, pullback, could be a strength move down here. Obviously, I'm just illustrating right now. You'll see more examples of those in our free trading course, which again is linked up in the description, right, as well as in the upper right-hand corner of this video. Now, where would be a good target as we go lower? Remember, whenever we have a breakout going lower, it's the first leg and the third leg are oftentimes very symmetrical. All right, first leg, third leg. Now, I've got some targets waiting down here. If I had to guess, if we went racing lower, I would guess at 1770, down to that 1707 area, right? This would be a great place right here for a pop, right? So they're going to grind down. They grind down. In this area, they pop it up, right? Now we get that larger channel coming down, right? And bingo from there, right? If this thing was to really kind of pop and grind down though, keep your eyes on this area, this kind of second rectangle as we go lower. Ideally, they'll want to take out that 1604 or 1623, but that may not be possible here for tomorrow. Over on the S&P, the S&P also has some areas. Again, think about the S&P, right? If we were to go lower on the S&P right now, there comes that a little bit steeper channel, pop it out. You know what I mean? That's a pretty easy game plan. If they rip through it, we get some more levels waiting on the S&P, 82, 65 level, right? That would be where I'd expect this market to want to go if all hell breaks loose, right? And the wheels fall off the sucker here for tomorrow. So I want to make sure you guys can see those levels so you're ready for them as well. Now, we may not get that pop and grind. We may not get that pop and grind going lower. We may pop down. We might hold that pullback, and we might simply jump off of that moving average. Remember, anytime we see one of these 1-2 jumps, right, these 1, 2, 3s, what do? We draw a trend line off that low. We mark off that trend line. What I would do in this situation is start thinking about some of these big highs up here. Right? Find that larger channel. And then again, look left, get that pop up, bull trap, right? Get above the moving average, buyer failure, into that pullback combo, right? And then again, remember, where we like for a target on this? First leg, that's your first leg, that's your second leg, right? And so first leg, third leg, that will really help you squeeze more profit out of that runner. One of the easiest ways to make more money is don't trade more often. Just get better at holding on to your trades, right, and letting them work for you. We'll talk more about that in that free trading course. We talk about kind of knowing where the best targets are going to be. Now, as we go lower, the only real way we can be a buyer is to buy a double bottom reversal, right? Now, remember, we're we're a little too bearish right now to be thinking about buying here, at least at this point, right? We have to see this battleship has to turn around a little bit more right now. But, let's say, for example, we get that grind going lower, right? We find that channel, right? We pop it up, the buyers get trapped in, we're back down, and then bingo, retest the low. Let's talk about double bottom reversal. At that point now, right? As we go back to retest the low, the professional traders, the smart money, right? They're selling high. So think about who's selling down here. Rookies, right? Rookie traders. This is pretty much the only safe way to be a buyer in my eyes until we can see this thing pop and hold a pullback and rip higher. I have a hard time picking a bottom on a market that's grinding down like this. But if I can get some of these bears to come in, some rookies we assume, right? These are not going to be professional traders down here. They'll stop, tight stops, small accounts. If we can use their stops as fuel, that'd be a nice spot there for a bear trap. Now remember, look at this closely though, right? I'm not talking about as we go lower, 1, 2, back up. That's a gamble, right? It's a gamble. A lot of times you'll get that 2 try, it'll pop up and keep on going lower. What I'm talking about here is if we do end up grinding down, popping up, again, there'll be a bigger channel on, you know what I mean? Same thing, right? We trap in those buyers and then again, bears come in, they sell high. The sellers who are selling off that high, where's their profit target? It's back to retest the low. So once those professional sellers are getting out of their positions, right? Once the bears become buyers of low and the rookies now march in and go, okay, now I'm going to show, no, right? Horrible spot to be a seller. This is where you've got an opening, right? Because if we can run some stops, guess, right? Just guess. Where do you think more big lot sellers are waiting? Because they're not going to be down here. Right? They're waiting up here. Okay? This gives you that little bit of an open window to make some profit before you get to deal with another round of bears up here for that run back down again. Right? So this is why I say the only real way to buy it as we're going lower, at least for what we know right now, is to trap in some bears with a double bottom reversal. Okay, please be careful trying to pick a bottom in a grinding, right, lazy trend like this, because a lot of times they'll keep on going. Does that make sense, right? I can trap in the rookies. Does it make sense the next big block of sellers above that high? Because why? Because sellers want to sell high, right? They're not going to want to sell low. So, and of course, if this thing rolls right through, we keep on finding new channels and we keep using those new channels, right? Hopefully that resonates with you as we go lower. All right, guys. I like the game plan on this Nasdaq right now. I'm pretty excited about for tomorrow. Time will tell, right? Time will tell. Last but not least here, let's wrap things up here on the oil. Right? Now, keep in mind, oil is a bit squirrely right now. And until we kind of figure out what's happening in Ukraine, OPEC came out this morning and said they're probably not going to make any adjustments to the oil supply anytime soon. So that kind of kept things relatively stable here right now. But we definitely have to be aware that oil is very much susceptible, big time earnings tomorrow. I'm not sure if you saw that earlier, right? But you might recognize that name, right? ExxonMobil, Phillips, Marathon, of course, being a local company here in Southern California, right? I mean, there's a lot of big, I mean, even UPS, right? How do you think UPS ships all their packages, right? So you got to think there's a lot of potential earnings moves here on oil. But as we see right now, we definitely are bearish. And I would say when you look at that 60-minute chart, which I loaded up in the description of the video, we're a lot more bearish on oil right now than we are on the others. That may change, of course, but right now that is the case right now. And really this is almost the same exact situation that we have here on the oil. We're bearish, but I mean, we had a strong move down. We retested that low. Is this a very easy place to want to be selling? Hell no. This is a horrible place to want to sell. So we have to get an incentive for the bears, right? How do you attract more sellers into the market? Either higher prices, because bears want to sell high, or a stronger momentum, right? That's the only way to do it. So we know this already, right? Go up, trap in the buyers, run back down, right? Go up, trap in the buyers, find that new channel, right? Short back down. Again, I'm going to go over this quickly right now because it's almost the same thing, right? On the previous charts, we go up, right? V top, we grind back down. Now look at this one right here. right? Obviously, you can't see much on this time frame, but if you go to like a 618 tick chart, right, this will be a pop up, a grind down, find that channel, right, and hit it off top of that channel. We pop up, we grind down, draw that channel, hit it off the top of that channel. So be aware of those. Be aware of those pop up, V-tops, grinds down. Be aware of that short, right, as we come off of that high here. Or we pop up, we retest, double top, 1, 2, go, right? We pop up, we pull back to the moving average. The buyers say, let's do this, and they rip this sucker, right? Got to be very, very strong. Got to be very strong, right? Because again, we're overall bearish now. This move higher needs to blow your hair back, right? It needs to be very, very strong. How strong? Strong enough for that strong move higher to want to be retested. Mark off that high, mark off that low. The good news about oil is oil definitely has more potential to be a decent reversal trade going higher here, because you'll notice there's a hell of a lot of space, right, back to those highs up there. Right? There's a lot of space back up there, whereas the S&P and the Nasdaq, they kind of bump into some pretty big areas up overhead here, right? If this lazy trend, right? If this lazy trend keeps on lazying lower, bigger channel, right? Just tilt the channel down, right? Pop it up, bull trap up above that high. Right? If it really rips and goes lower, keep your eye on 75, 72, really for the most part, and you'll see on that slower time frame, the description, the 75, right? 75 big round number looks like the bears, if they can kind of get this thing cooking lower, it looks like that could be an easy objective. We get a big range below us there. At around 74. So again, if we were to pop, right, and grind down, draw off that low, right, off that low, up around these highs here, pop it up, there's your short, right, above those prior swings. And again, I'm keeping this pretty simple right now. I'm not going over all the entry tactics. If you want to get a deeper dive into the entry patterns, right, that we use in our trade room, definitely grab that free trading course. That'll be a lot easier for me to really go over a lot more detail of those entry patterns. And then again, right, if it simply kind of pops, pulls back, right, and then jams right off of that moving average, bingo, mark that high, mark that low, find those swings, and we're in from there, right? And remember, right, so first leg, third leg, and again, we get some levels waiting below us. All right, guys, again, now I would be a little more careful right now on a double bottom reversal on the oil right now, right? Again, because we're a lot more bearish overall. So if we can get this thing going lower, popping up and retesting, okay, 1, 2, right, back up, that double bottom reversal, back up to take out these highs, okay? But be aware, if it was me, I would go small size on that, right? Because you're going against that overall directional bias, right? I can really load up a big position when I'm going with the overall momentum of the market. You're more likely to be successful. When you're trying to go against that overall momentum of the market, you want to think either skip the trade altogether, wait for a better trade, or simply go smaller size, right? That's what I'll usually do in those situations. All right, guys? Boy, hope you learned a bunch here tonight. Got a bunch of really great charts. A lot of similarities here for tomorrow. I'm very curious what happens tomorrow because, like I said, when you look at the slower time frames right now, it's easy to see we are just a little bit leaning more to the bear side right now on the S&P and the Nasdaq. It'll be very interesting to see what happens here for tomorrow. You know my game plan. What do you think? I would love to hear from you down in the comment section. Is this game plan crazy? Do you love it? I would love to get some feedback. And while you're down there, right, hit that subscribe button, hit that like button, and make sure you set your notifications here for tomorrow. Guys, don't forget, if you need any help at all with anything we talked about tonight, free course, trader membership, the easiest way to get help is to call the office. I'm always here to help out every step of the process. You can always use live chat as well. So if you need help with anything we talk about here tonight, definitely pick up the phone, shoot us an email, jump on live chat. And again, I'll put all the membership links, all the free course links, I'll put all the good stuff you guys need to make some money tomorrow down in the description of the YouTube video. All right, guys, great work tonight. Now get some sleep. Got a big week ahead of us. Promise me you're not going to obsess about the numbers. Remember, the numbers don't matter this week. It's all about trade the chart in front of you. All right, guys, I'm out of here for now. How about those Eagles? How about those Chiefs? Man, oh man, who you got in the Super Bowl? I'm not quite decided yet who I'm rooting for the Super Bowl. I'd love to hear who you are in the comments section. But boy, what a great weekend for football fans. American football, of course. All right, get out of here. Get some rest. I'll see you guys tomorrow. Be well. Be nice to each other. And adios, amigos. Bye-bye for now.